Hi everyone, Gianni DePoce here with you for TheoTrade, and today is Tuesday, the 15th of April, 2025, and we are seeing stocks still spinning their wheels near where we opened the week yesterday. So it's still been pretty quiet, and we are seeing the volatility and VIX continue to drop. But the question is naturally for how long? Take a look at the S&P here. We did have that amazing rally off the lows last week where we had over 98% of the stocks in the New York Stock Exchange advancing to the upside. So it was a short squeeze to remember. It was also a record volatility crush as well as the VIX has been dropping, still flirting with that $30 mark in the VIX here. And remember, the more that this stays elevated, the bigger the price swings that we're going to get in the S&P. But there's some good things, some bad things happening in the tape. The good thing, let's start with the good news, is that we're still seeing technology and the NASDAQ 100 lead to the upside. So last week, the top performing sector in the market was technology. We even saw semiconductors do better. And with the cycle work that I do, one of the things that I like to see is technology and especially chips outperforming coming out of a market bottom. And so we have that signal. Does it mean that the market has bottomed? Not necessarily, but it does give bulls some wiggle room in the near term. That being said, the VIX is still elevated, so that means that we're really just one headline away from volatility returning and the VIX spiking. But in the meantime, one of the things that I've been talking about is how it does seem that there are some stocks that have bottomed. So let me explain. Even if we see volatility come back and the indices drop to new lows below where we opened last week, that doesn't mean that all stocks are going to make new lows. Okay, so what we're doing now is we're scanning the entire market, all the equities, to see which stocks held up best during this pullback because those are the ones that are most likely to emerge as leaders once this thing turns around. That's what it comes down to, is looking for the next batch of leaders. If we do drop to new lows, we probably will see capitulation at that point. Now, in terms of getting the all clear in stocks, what's challenging here is that I would want to see prices take out this high from the 25th of March in the S&P. And as you can see, it's still quite a distance away. We're talking like 500 points, if not more, higher. So there's still quite a bit of space on this chart before I can give the all clear signal. Even if we were to drop back down and form a higher low, okay, well, we still haven't formed a higher high, which is what we need to pay attention to. To top it off, that is also a former support turned resistance zone where we saw prices chop around. But that's also the line in the sand for stocks. So this is the crux of trading, is how do you find a position where you don't have confirmation that the trend is back to the upside for another 500 points in the S&P. That being said, what I'm seeing in some of the chip names like Nvidia is holding up pretty well, but Nvidia is also trading in this former support turn resistance zone. I would like to see Nvidia get back above these highs from, the 20, I think here it's like the 24th of March. And what's going to be even more key again, because semiconductors are known to be a leading sector. If Nvidia takes out that high before the S&P does, I'm going to take that as a good sign. I'm going to take that as a good sign. Okay. Another name that I really like, although technically not in the Mag 7, one that I'm watching for a potential setup here is Netflix. Netflix looking good. Have some trade setups here that we discussed in the live room. And, we're going into earnings in a couple of days. This has been shown to be a big mover in the past during earnings, either to the upside or to the downside. But, with the way this thing is up, 5% on the day, I don't think that we should entirely rule out a recovery in some select large cap tech names. Another one that I'm watching that we actually still have a position in as it survived the recent volatility is Tesla. Tesla has been consolidating its losses, but I do like the price action here, especially since this is around the level where we started buying in the fall before we had that amazing run higher. Tesla was one of our best trades last year, and it was around these price levels that we were initiating positions. let's be clear, there is still a lot of fear in this market and a lot of skepticism. That is music to my ears. But we know that there is good cause for there to be a lot of bearishness out there, especially when you consider the spread between the bid and the ask in a lot of these stock names are at multi-year highs. That is a concern. And a lot of it has to do with liquidity. Bond market liquidity has been showing some stress. Credit spreads have finally, participated in this sell-off. In other words, spreads have been blowing out. Liquidity has been evaporating. We are seeing a bit of a rebound here in bonds, both the 30-year and the 10-year note up nicely. I like to look at the 2-year note as kind of like a Fed watch type of thing. And we did rally to a new high and take out those highs from September. I am expecting a breakout from this formation here in the 2-year note and eventually for the Fed to cut rates. I don't think they're going to cut on March 7th, but I do think in their June meeting they will restart the rate cuts. Now, one of the things I like to look for when it comes to credit spreads is how treasuries are performing relative to corporate bonds and junk bonds. Now, the good news is today is that you are seeing uh, junk bonds, well, they're rallying about the same as the treasuries. So, you're up about 1/4% here on IEI. Junk bonds are actually up a little bit less. So it's close, but you are seeing the spreads narrow a little bit. You take a look at investment grade corporate debt, high quality corporate bonds, okay, they are up more than treasuries as well. So this is what we want to see. We want to see private credit doing better than treasuries. Remember, treasuries are considered to be the risk-free asset. I don't know if I necessarily believe that, given everything that's gone on lately, but this is where a lot of the stress in markets are coming from now. And that's why the Trump administration has been so fixated on what's happening in bonds. To be clear, I do think interest rates will fall later this year, but is it for the right reasons? That is the question. Is it just because inflation is coming down, or is it because the economy is slowing down? We know there's a relationship between inflation and economic growth or economic slowdowns. So that's the thing that we need to watch right now. Now let's talk about what is a strong and trending market. Gold is by far the cleanest uptrend in the entire market right now. We did a special presentation back in January on how this was likely to be a good year for gold, and that continues to work very well. Silver is up today, but just less than gold. GDX hitting new highs. Silver miners are up even more. So I would call it a mixed day for precious metals, but our positions that we've been covering here at TheoTrade in great depth. Alamos Gold, okay, that's hitting new highs, looking very strong. We actually backed up the truck recently in the Trinity trade on KGC. That's hitting new highs here, looking really good. Anglo Gold Ashanti up another 2.5% on the day, looking very strong. And we actually just took a position in Pan American Silver as well. I think a lot of these silver names do have some possibilities to squeeze higher in the coming weeks, especially if you see silver start to participate to the upside. So, names like Pan American Silver, some of these bigger ones, we actually captured some profits in Agnico Eagle Mines today, 34% gain from that buy back in January. So again, there are things working in this market. It's just a matter about identifying those trends, finding the good risk reward setups, and focusing on where the strength is. Okay. If a stock is down less than the overall market right now, that's a name you should be paying attention to. If a stock didn't make new lows last week when the market sold off, that is a name that you should be paying attention to. Look at AEM. AEM never took out that low from the end of February. Okay. The S&P did. This is a stock that you should be paying attention to. Let's jump over to crypto. Seeing a little bit of selling in the tape today near the lows of the day. The big line in the sand has been and continues to be 88 to 90,000. Until Bitcoin closes above 88 to 90,000, there is plenty of reasons to exercise a reasonable amount of caution. But again, I've been talking about this in the Theo Live room. There's not going to be some megaphone announcement that, hey, the market is bottomed, time to get aggressively long again. No, we have to, dip our toes, small positions, small swing trades. Okay. Looking for those high quality setups. Ethereum also retreating a little bit today. So again, there still are some issues in the areas of the market that point to, whether it's time to party again in the USA or whether it's time to go home and, take our ball and go home. Crude oil consolidating its losses again. It's one of the amazing things about this market environment is that if you were to ask me if inflation was a threat, and we just were to pretend that the tariff headlines didn't exist, I would say no, inflation is absolutely not a threat. So we're going to see how that plays out. Crude oil seems to be consolidating its losses. If we see another, leg lower in crude oil, then I think that we will see potentially volatility tick back higher. So again, that's what we need to watch. The VIX below 30 is a good sign, but we are hovering in that ballpark. And near term, we just want to see technology and semiconductors continue to outperform. And we're going to see again shortened trading week this week. Markets closed on Friday for Good Friday. We'll see how we finish out the week. But if tech emerges as the leader for the second week in a row, I think we need to stay open-minded to the possibility that the market has bottomed. Again, we still have not seen confirmation, but there's not going to be some big announcements, so just keep that in mind. That's all I have for today, everyone. Thank you so much for watching. Hope to see you in the TheoTrade live room, and we're in earnings season, guys, so there's going to be a lot of things going on, a lot of moves. If you're looking for earnings style trades, I would encourage you to take a look into Don and Blake's earnings flips. Really nice setups to take directional moves or take good risk reward setups on earnings. So definitely check that out, and I'll see you soon. All right, take care.